If you struggle scalping the market, then I'm going to share with you a 5-minute scalping supply and demand trading strategy that is going to change everything here for you today. So let's go over to those charts and I'll show you how you can apply this 5-minute trading strategy on the Euro USD pair. And we're looking at using our scalping entry on a 5-minute time frame and our targets on a 5-minute. And then we're going to use the 1-hour time frame to confirm that direction. Now the way we're going to do this is let me first go over to the 1-hour time frame. We're going to use 1-hour candles to confirm our direction. We're also going to use these blue and red candles, and more on those later in this video. So make sure you watch to find out what that is, because it's an important part of this strategy. And then we're going to use this candlestick. Once it's closed, the close of this bearish candle, we'll see this red candlestick form. We can then mark this candlestick as our bearish order flow candle. So we mark it out from high to low, and then we're looking for any sells in this zone. Now we're going to be looking for sell in the 5-minute time frame. So let me just mark this out. We have this candlestick closing. Okay, we then have another candlestick here closing, and that closes on the close of this candle. So by the time we've seen this close, we then have this candlestick form as well. And then we also have the next one as well. But we're right at the bottom of the move there. So let's go first to this area, go to a 5-minute time frame. What we're looking for is our areas of supply right now, because we're inside a bearish zone. So we're looking only to sell. And this is our first area. Okay, so this is where we've closed down that candlestick. You can see we already had this drop-based drop zone here of supply, which has been reacted off this zone. We then have this area of supply, internal supply. We reacted off it as well. So this leaves this push down in the market. This leaves this area of supply on this indecision candlestick. We have a pullback into that supply, and we also have a sweep of this high. Now there's a few ways we can look at taking a entry on this type of strategy. The first one is we can look for a entry typically off the zone. So especially if we see this build up of liquidity below a zone, we can simply look to take an entry off this zone, stop at the high of the zone, and you just potentially target the swing low. So you can see targeting this swing low here, we just around 2-to-1 risk to reward. Okay, this swing low just here, 2-to-1 risk to reward off this zone. Now that's one way of taking entry using this scalping strategy on the 5-minute time frame with supply and demand. Now the other way is we wait to confirm the move out of that area of supply on the 5-minute. That's by seeing this bearish candle. Okay, that is confirming that that's the dropout on this move. Now obviously you can see the risk to reward is going to be much smaller. So what we can also do is look for a better swing where the market's going to want to go. So if we're taking an entry here to this swing low, you can see we've only got a 1.5 risk to reward there. If we look back on a 1-hour time frame to see if there's anything else we can see there quickly, this is our current move down. Looking back in time, a long way back in time, we do have, this swing low right here in the market. That swing low could be a potential target. We now go to a 5-minute again. And to come back to where we were. So here is where we were on that entry. Now you can see this time, if we're targeting this low instead, because this is our first low, that's our second low. There's nothing else back in time except for that 1-hour time frame. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you a free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything that you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate you more profits and the steps to building a profitable strategy for yourself. You don't have to spend a lot of time on this. It's about doing the right things in the right order, and it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. We've now got over 3-to-1 risk to reward. So that's how you can increase that risk to reward. That's your first entry. This is our next area. There's our dropped downside. Okay, this will already become my origin area up here of supply. Market doesn't really come back into that area of supply. So that is the area. Now, the first time we see the market come back into supply is over here. But at that point, you'll see in a moment that we have a bullish actual candlestick. So go back to the 1 hour. Let me just now go through the same thing again. Let's just remove all this off. We don't need this on the chart now. So we then have a bullish candlestick forming here, okay, on the close of this indecision candle. So right there on that candlestick closing, you're going to have a bullish one. And again, we can do the same thing. We see another bullish one closing, okay, right on the close of that candle. We have this bullish one form. And again, we have another bullish one forming there. And we then have this bearish one forming on the close of this candle. Let's just change that to a red line, so we know it's the bearish order flow one. We have another one closing there. And most recently, another one right here. We're now having a reaction off this. You'll see this live in this video. So we have a bullish. So what we can do now is just quickly mark these out. So this is a bullish candlestick. And notice how price holds at this zone. Again, we have another bullish one right here. Again, you can see how the market holds that zone. What takes that zone is this bullish order flow is taken by this bearish candlestick, which then creates more bearish order flow. We never had a bullish order flow head to the upside on a bullish candle, so we can't really find an entry here, but we can see the market does hold at this bullish candle here before we push back up again. And one more, we have this candlestick we can draw as well. Now, let's draw out the bearish ones as well. We have a bearish one here. That's the easiest way for you to mark these out is on the 1 hour. Quickly, these zones. We have another bearish order one here, order flow. Now, you'll see in the moment when we go to this that we wouldn't take an entry on this one. And you'll see why, because we had this bullish order flow candlestick. And let's put this one on as well. Just as we saw this entry down here was looking for, we formed this bullish one before we could take an entry off that supply up here. So you'll see that's how we can actually work this. Let's go back to 5 minute now. We have all these marked. Now you'll see this in live conditions right now as well, how we use this. So again, like I said, we were looking at a potential sell off this zone here of supply, but we formed this bullish one first so we don't take it. So this is my order flow. Now to the upside, we have this bullish area here. We can mark that out as a bullish order flow. So we first come in, let's go closer into it, looking for an entry off demand on the 5 minute. So as we come into this area of demand, we create some area of liquidity here in the market. We push down into that demand zone. If you're waiting for a reaction, you wait for this candlestick to close up, or you can take again that entry off this area of demand. So there's your entry, there's your stop loss off the demand zone. Your take profit is going to be this high. And you can see that actually works, 2-to-1 risk to reward. If you're taking the entry off this candlestick, okay, there to the same high, but your stop loss is then going to be much bigger, you've got just under 1-to-1 risk to reward. Now, 1-to-1 risk to reward to me is not big enough. You really want a 2-to-1 or bigger for this strategy to work when you're scalping the market. Now, if you're patient enough, you can see that we actually come back in again, creating another liquidity grab below this candlestick. We never close this area of demand on the 5 minute either. And you saw that on the 1 hour as well. There's your reversal out, wick down, bullish candlestick. That's my entry. So you can take an entry off that candlestick, stop the low of the candle, and your target becomes that swing high right there in the market. And we have over 3-to-1 risk to reward. Another great trade is taken. Now you could have taken this one and taken this one. Okay, so you could have taken one off the demand zone, then found this as a second entry. Now we go to the next one. Again, here's our break to the upside. There's an area of demand left over. That's our swing low. Okay, we have area of demand down here as well, formed the low of the candle, but we see on the close up, we have an area of demand. Market comes in, we wait for a response. There's your response out. That's your confirmation, okay, that candlestick. Where's your target going to be? You could target this high, or you could target this high, whichever one you prefer the look of. This is more of a drop-based drop high, so this is more of a swing high, so better high to go to. So you can take an entry off that candlestick, stop the low, or the low of the zone. Now, if you took a target here, you've got just over 3 to 1. Target here, over 4 to 1, nearly a 5 to 1 risk to reward. That's a 5 to 1 risk to reward scalp in the market. You're in and out as quickly as possible. Another winning trade. We get to this bearish one in the market. Where's your area of supply? Well, to be honest, this is going to be my area of supply. Here, bearish zone. That's your area where the market has gone down, okay? Then we have an area of liquidity created. Wrong thing. Grab that. Let me just do that again. Sorry about that. It's the area of liquidity. And you can see the market creates area of liquidity to go up to take them swing highs, this high here and high here, to push up into area of supply. There's your entry on that confirmation of that bearish candlestick. So again, you take an entry on the bearish candlestick, stop goes above the high. Target is this swing low. Okay, and you can see we've got just under, just over, sorry, a 1 to 1. Now you could also look at this as your swing low because this one is quite close. Okay, if you did go for that swing low, you would improve risk to reward to a 2 to 1. All depends on how you're actually looking at those markets. Right there for me, this is more of a consolidation area. This is more of a swing low to target the market. This is an area I expect to see liquidity taken. So that's another good trade. We go forward. We have another potential sell trade here. That's a push down. Now, for me, this was the area of supply. Okay, I would have preferred to have taken. It already got triggered right there in the market. Okay, so there's no potential trade there. The next area of supply is this zone. That's where we're looking for an entry. Now you can see the market failed to come into this area of supply here, but we created a bullish candlestick on that 1 hour. So we never take this entry off supply. What we're looking for is the area of demand. So you can see that we have this push up and a pullback here. You could have said you looked at this as your area of demand off that move up. If you did, we closed through, you may have had a losing trade. Okay, because we did close there. Your next area of demand would be this, kind of like this rejection candle. Is a good looking area. We could even use from this swing low. So if we did have a losing trade, then you see this move up. I'm talking about when we see this bullish candle closing up, had a nice reversal pattern. Then I take an entry off that candlestick low, and this would be my target, this swing high. So just over a 2.5 risk to reward. Another successful trade. If you took that loss here first, don't just walk away. You know, you've got another entry here. So you can see how we never took the sell up here because of this buy using those 1 hour candlesticks. Next is this push down on this 1 hour candlestick. We have this area of supply. Let's mark that out. Bearish zone. Okay, we have, this is our closing area. We don't really have this as an area of supply. This is a nice push down area of supply. Pushed up to it. Actually failed to go into that area. Let's mark this out as our area of liquidity. Now it depends if you're using this top candle as your area of supply or using that bullish move up first before the drop down. Now we do go into area of supply. I prefer to use this as my area of supply. This is an area of liquidity. What I'd like to see then is the market pushing up into this area, drop out and then push back down. Now this would have been a nice low in the market. It looks like now we're forming a low here. So if we did push up here and we had a sell here, then potentially this would be your target, this swing low if it's formed. If not, you'll be looking at this as a swing low in the market. So that is the 5-minute trading strategy with supply and demand. It's how you can simply look to scalp the market using these candlesticks on the 1 hour to find those zones to know if you're bullish or bearish, and then looking for the areas of supply and demand on that 5-minute time frame. So the rules are simple. You go to the 1 hour time frame, you're looking for those bullish and bearish candlesticks, marking out those areas and then looking for a trade on the 5-minute time frame. So what did I say at the beginning? I was going to talk about what these candlesticks represent. Each of these red and blue candlesticks represent an area of imbalance in the market. They are very crucial to your trading to understand the imbalance. If you're not sure about imbalances, there'll be a video coming at the end of this video that goes through 56 minutes worth of imbalance trading and exactly how you can use it to grow your trading. But if you want a 2 time frame approach trading strategy just with supply and demand trading, then you'll want to check out the free trading strategy class, which you can check out right now.